Yeah, the real estate's consistent. If you're in it for when you go see the stockbroker, they say, Glenn, you can't time the market, right? Well, the
Mhm.
reality is at some point you retire or you're going to die and you need your money. So you have to time the market. So it just happens based on our age. We age out and we need our money. The stock market is volatile. Real estate in the multifamily space is not volatile. Yes, there's ups and downs, but overall, over a 50-year period, it outperforms all asset classes. So the comfort should be in the real estate. And yeah, people can't get their money out immediately in real estate, but when they get it, it's actually more money than they put in.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter.
The question is, why are people willing to put money in the stock market and take enormous losses? But when it comes to investing in multifamily real estate, which is the safest asset class of all time, in our case, we've had no losses in 13 years out of over $1 million of transactions. I present the opportunity there, and it seems too unbelievable. They'd rather defer to their stockbroker than they would to themselves, making a decision to put capital into a safe, sound investment that has current pay as well as enormous returns. I don't get it. So tell me, Christina, why don't you address that on your show sometime?
Well, we're actually going to address it right now, Glenn. So we're here. We're going to address it right now.
Oh,
I
okay.
want to hear your opinion, and I'm happy to give my opinion. And the reason why there, listeners, welcome to the show. Glenn and I are off on a topic, so I am excited to move forward. This is Glenn Hanson with Colony Hills, and we're going to have this conversation before we get into our usual format. Glenn, I love that you bring this question to mind, and here's why. I'm having that exact same conversation with my clients right now. They're losing money in their stock market while we have a few of their real estate syndication deals go like, hey, wait a minute, we're gonna have to stop our payments for 6 months or 2 years. We're gonna have to, pull stuff in and not do our scheduled payments, but you're not losing capital.
Yeah.
Because it's real estate. And I don't have them chatting up my ear about how horrible the stock market is, how unpredictable it is. Oh my gosh, this isn't what I expected. Oh, I'm so disappointed. It's such an unstable investment. And I'm like, have you looked at how much you've lost in your stock market versus how much you're losing in real estate? Have you looked at the numbers? Because if you look at the numbers, just the numbers, investment to investment, what are they going to find, Glenn?
Yeah, the real estate's consistent. If you're in it for when you go see the stockbroker, they say, Glenn, you can't time the market, right? Well, the reality is at some point you retire or you're going to die and you need your money. So you have to time the market. So it just happens based on our age. We age out and we need our money. The stock market is volatile. Real estate in the multifamily space is not volatile. Yes, there's ups and downs, but overall, over a 50-year period, it outperforms all asset classes. So the comfort should be in the real estate. And yeah, people can't get their money out immediately in real estate, but when they get it, it's actually more money than they put in. So that's a plus.
Almost always. It's
Yeah.
almost always more money than they put in because it's a hard asset. It's a commodity that
Yeah.
actually holds value over a long period of time, regardless of the IRS code. We can have a conversation about that later. But it's a commodity that actually holds value over time and therefore moves with inflation, increases, and rarely disappears. Land rarely disappears, right?
Yeah.
Our business will disappear.
But to be fair, there are losses that some people do have in the real estate business that can occur. So I don't want to oversell this, but we've been in business for 13 years. We've done over $1 billion in transactions, and we've had no losses. So when I sold my business in 1999, I gave all my money to one of the top money managers in the United States that ultimately went bust during the dot-com, or not after the dot-com crash. And they wiped out more money in 18 months than myself and my brother thought we'd ever have. We took a 20-30% haircut. Then we moved it to the next biggest and best company in America, who also needed help from people during the '08 crash. And they lost 50% of what was left, which brought me to this business.
Which brought you to this business. So we can get into your story. So your story is that you were, right? So what were you doing that you were able to create enough capital to place in these investment firms that were in stocks?
Yeah, so prior, my former career was I ran a machine tool company. It was a family-owned business that I got involved in when I was very young. And my brother and I, we were there. I was out of high school, and he came in out of the Marine Corps. And in 1991, we bought the business, and we decided to scale it. And the reality is, we were so busy with the tool business, and although I went to school nights for 14 years, I never graduated. We really didn't know what the S&P 500 was and how it worked, and we didn't know anything about stocks, because when you have your own family business, you're living out of a shoebox, right? You're building, making cash, buying machinery, hiring people, and you just keep doing that until one day somebody comes along and pays more money than it's worth, and you sell it.
Right.
So there we are, caught not knowing how to manage money. So we thought, we'll go to the professionals and let them manage our money. And boy, the story was smooth, right? You know, you're in good hands. If you just go off and relax, you can make $500,000 a year and live happily ever after. Well, that didn't work out. And so how did we get the money? We earned it over 35 years. And then the trick is we lost it. We lost our money giving it to an outsider. And sure, our company lost money over the years, but nothing like we saw in the stock market. So what happened there after that is I decided that I would learn how to manage money, and the best way to do that is to get involved with angel investing, I thought. Then I created an angel investment group of my own, and we brought 35 members in, and we funded 100, maybe more, 100 million or more in deals between myself, our partners, and then going out and raising capital.
Okay.
And through that process, I initially was the first chairman, and I vetted over 700 deals and saw what makes money, what doesn't. And I recognized that if it doesn't go to China, it's wildly profitable, scalable, doesn't need skilled labor, and recession-proof, it's a win. So I reviewed all these deals that I had either invested in, which were 25 companies, and I looked at the deals that we had on the table, and there were really only two that resonated to that filter, and they were pet cremation and multifamily real estate investing. So I did both. I built a pet cremation company, and my goal was to take it nationwide. And it was purchased. It was started in '07. It was purchased in 2016, and I started the real estate investment company in 2008, which was quiet for 3 years because the world fell apart, and we didn't have access to capital in '08, and it was impossible to raise it. But I kept the team going, and we made our way, made our first buy 3 years in, and there we were. And it became so profitable and so enormously fun that I decided to focus on that and let everything else time out. The transactions that I had, I didn't put more money in or focus on those, but strictly on real estate. And it's the best business I've been in, and I can compare it to over 25 companies that I've been in. And the reason it's good is it meets the filter, right? But it has one other quadrant that I love. So let me remind everybody: can't go to China, wildly profitable, scalable, doesn't need skilled labor, recession-proof. And then the sixth, which I didn't know when I started, is that whether you're a Republican or a Democrat, you'll support housing. So I thought, wow, there's actually a sixth attribute here that makes it a good thing. But forget all that. What really matters at the end of the day, we're making a lot of money for our investors and ourselves, and it is safer than anything I've touched, including machine tool and die, plastics, injection molding. This is it's a safe haven for people's money, my money, and yes, there's ups and downs, and nothing's perfect, but by comparison, I'm putting my energy into multifamily properties.
All right, let me read why Colony Hills Capital offer your website. We offer a specialized focus on one market segment, value-add multifamily housing, mismanaged, underperforming, and undervalued Class B through Class A minus multifamily assets in growing markets. Our extensive and worldwide network of relationships uncovers significant opportunities, allowing us to respectfully achieve a win-win on investing in multifamily properties. Each business plan is property-specific, targeted capital improvements, and strong hands-on management throughout the hold period maximize asset value and investor return. So you gave us your 6 basic categories as to why this works, but there's also more. And I know, and the reason why I know there's more is because inherently real estate, it can be complex and can be demanding. And so what is it that you set up inside of your company to have your investors be successful because your assets are successful?
Yeah, well, it starts with my core belief that work should be an extraordinary life experience. And
Let's
with
talk about
that,
that.
yeah,
That by itself to me is wonderful, regardless of your asset class.
right.
That conversation is a profound conversation.
Yeah, so I try to work to build that attitude throughout the organization with our investors. Um, my background in training with Stephen Covey in the 7 Habits of Highly Effective People really is my core belief and my mission and style of management, which helps. But at the end of the day, our thesis when we started was to keep it simple, to buy underperforming, underloved, undermanaged properties that have a value add component where we could buy them at a theoretical discount, and then we could bring some value by improving the property and the people's lives that live there, because the tenant, by the way, is our only source of revenue. I mean, we don't ever want to forget that the person paying the rent is paying our salaries, right?
Right.
So we talk about all the good things. Well, the tenant's the best, right? It's like, who doesn't love their customer? So the thesis was, let's buy right, let's love the customer, let's do good things for the property, and we'll make a consistent return. We didn't expect it to be as juicy as it's been, and I think that our success there comes from buying right. Most of our transactions are off-market deals. We're in tertiary markets for the most part, and we focus not on a specific region. We focus on what our thesis calls for, and that's an 8% current pay, 20% IRR, and that's where we go. And when I started the business, ironically, people in the business told me, you can't do that because you real estate's local and you can't manage something or know a market if you go far away. And I thought, heck, we were doing technology transfer around the world with my company. And I thought if we could install robotics or equipment in Europe or Japan or even California, I ought to be able to manage a property that's an hour and a half away, which brings me all the way to Atlanta from Boston, right? So I thought that was kind of comical.
Yeah.
And so our first transaction was in the South, and that was the market that at the time was meeting the thesis, right? But I'd go to the Midwest. Right now, the Midwest, it may become an appropriate market for us, and we wouldn't hesitate to go there. So
where do you currently have buildings?
we're in Actually, we're in Massachusetts, Connecticut. We're closing a deal, I think, in New Jersey. I say think because we're not hard on the contract yet, but but most of the transactions have been in Alabama, Florida, and Atlanta. And today we have 8 assets, about $500 million worth of property that we're managing.
And how long do you hold on to your properties for?
Yeah, so that's a great question too, until they meet the pro forma, right? So we just sold one we bought at the heels of COVID, and we plan to hold it 5 years, but we were able to achieve the purchase price, the selling price in 2.5 years. So we sold it. We sold it in December of 22. But the goal is 5 years. And a lot of that is driven by our source of capital. A lot of times the capital wants to get out in 5 years. We would probably hold them a lot longer if it was our own capital, because we could keep that value growing, or we could roll it into with a 1031 into another deal. So someday we'll have our own money. You know, we have to just grow up. There's risk in everything.
There's risk in everything. So, well, let me ask the next question, which has to do with one of the things that you talk to is how you treat your employees. You gotta love your tenants, gotta take care of your tenants, love on your tenants. But you also, because they're the ones paying your mortgage, that's making your business successful. But you also really focus, maybe it's because of your long background in business, you really focus on supporting your employees. What does it mean to create an environment where even the employees, all the way down to the tenants, are having a win-win experience?
Yeah, so the reason I treat my employees well is that I'm not smart enough to do everything myself, so I need them.
We all need them, Glenn. It doesn't even matter how smart you are. We actually need them. We do.
Yeah. So one of the plants I had once was a union company, and in probably 82, when Ronald Reagan took over and Paul Volcker raised interest rates, we had a strike, and I figured, we're not going to make it anyhow, so I'm not going to have a union anymore, and so I decided not to settle. And after that, at that point, we had in that factory, we probably had 30 union tool and die makers, and so I had to go back in the shop and work, making things manually myself with whoever I could keep, like out of the engineering department, or we hired what they called scabs at the time to come in and take those roles. But what I realized is when you walk out into a factory and you turn on the lights, there's no machines running. It's pretty desolate, quiet. But the reality is you can't make any money without any people, right? You have to have them. And we, of course, learned a valuable lesson in that whole process. So I think the fear of not having people is a fear that I witnessed what can happen. But more importantly, they have lives, they have families, and they deserve to make market rate when they're working for somebody, right? So we start by paying market rate for the positions. And I argue with people that say that they can't find people. It's because they're not paying the market rate.
Right.
It comes down to that, and then you do pay more, but you get more, and then you have that win-win synergy, and they're not worrying about paying their mortgage. They're focused on helping Colony be successful, and on and on. But yeah, sure, I'm a big believer in the people side of the business.
Well, and I think yes, clearly. And you talked a little bit about how I think you're offering a benefits program that encouraged people to invest in colonies. So
yeah. Well, we're testing a program right now, which I don't want to put on the air.
Okay.
But so we're testing something now that's pretty unique and novel, and it's a game changer for our business, for our company. So
and for supporting your employees, and I think I can say this piece, which is, I'm not going to say what it is, but that you're encouraging your own employees to understand the value of investing.
Right.
That you're not only just like, hey, yeah, maybe you process our books or maybe you push paper around for us, but we're an investment company. We're
Right.
encouraging you to embrace the concept that you can be an investor, even if your job is about pushing paper around or talking to tenants.
Yeah, we have 18 employees now at Colony, and I think, I'm guessing at the exact number or the number, it's probably 80% participate in the transactions with us, which is amazing.
It's faith in the company, right? They're doing the work. They can see it. They're literally seeing it from the inside out.
Yeah.
I mean, when you talk about transparency and investing in a deal,
it is pretty cool. The deal we exited in December, we had for some investors as high as 75% IRR. And the employees, some of the employees were in those higher level tiered performance LLCs that made up that investment capital stack, right? Yeah. And they're sharing it with their friends, and their friends now want to participate in the deal. And the reality is, you can't do that. That may have been one of a kind, but the enthusiasm is felt by the team for sure.
Yeah, it's felt by the team, and it's I think I have a theory, Glenn, and I'll share it with you, and you can agree with me or disagree with me. But I'll tell you my theory, and we'll see where you stand on it. I think as we get older in this world, and maybe I'm wrong, maybe it's not just our age, right? I'm in my 50s, and you're a little older than I am.
Yeah, just a little.
And as we get older, I think we start to maybe focus less on the dollar and more on the value. What's the value we're bringing to ourselves, to our employees, to our children, to our investors? What's the value? And that value goes beyond the dollar. And I think
that gets easier when you're not worrying about making the mortgage payment or paying the car rent, right? The payment.
Maslow's hierarchy of needs is taught over and over again for the same reason, right? If you can get your living settled, you can move on to the higher levels of needs, right?
Yeah, that's the magic, I guess my definition of wealth would be, or of independent living would be, to not have any debt in your personal life that would stop you from enjoying what you're doing, no matter what you're doing, right? If you're gardening or you're building an empire, to worry about how you're going to eat is pretty scary, right?
So, go ahead.
As we get older, we figure that out and we avoid those traps.
So financial freedom, because that is the question I told you I would ask her. What does financial freedom mean to you? What you're saying is, it's like the capacity to not worry about how you can eat, so you can worry about higher things on that Maslow's hierarchy.
That's right. Yeah, that's and then the reality is, I don't mind working hard. I don't mind losing money. I don't mind taking chances, but we have to have the core taken care of in order to be able to take those risks in a smart way. Mm-hmm. And it's the process we love. It's not the end, right? When I sell a property to gain, it's anticlimactic, right? It's like, oh, now what am I going to do with the money? And and I miss that pool, and I miss going to that place. So if you look at it as that the process is the game, it's never as stressful as if you think it really matters, right? So I guess my definition of financial freedom is that when you can ice skate through the process, that you've made it to your level of what you think financial freedom is. That's the magic for me.
And I would say there's a freedom, like you said, when you're no longer worried on that level. There's a freedom to do win-wins for your employees and win-wins for your investors. And
oh, sure. Yeah. So the win-win for the employees. A lot of people give to philanthropic causes, and I say, why not give to the employees? Because then they can give to who they want to give it to. So they made the money too, right? So it's important that they feel the sense of extra capital that they can do something good with. So to the extent we can feed it through to the team, we should.
Nice. I love it. I personally love it. You remember that we were, so, for the listeners, Glenn and I met at a conference, and we just randomly were standing next to each other. And I'm like, so who are you? Like, let's talk. And as Glenn unraveled his story for me, I was about like after 20 minutes of talking, I'm like, you need to be on my podcast.
Yeah, this is only the second podcast I've done, and it's actually, with all the things I do, this is actually intimidating. It's you think this is going to be live, and if you smirk wrong or do something crazy, you're going to be open to criticism. So these are my training. You're helping me with my training wheels.
I totally understand. I have that same problem with my social media. My podcasts don't bother me anymore. It's my social media posts that freak me out.
Yeah.
Like if I put out an idea on social media, or like a rule of thumb on, real estate investing, I have literally had like 20 different responses go, "Oh, you're an idiot." And I'm like, wait a minute, I'm not an idiot.
Yeah.
That intimidates me. Social media intimidates me.
Yeah. So it's good. It's good practice. It helps us communicate.
It is.
Choose your words. Choose your words.
Choose your words. Choose them thoughtfully. So I'm going to double back to our topic at the very, very beginning before we bring this to a close. So at the very, very beginning, your question was, why do people trust stock and bonds more than they trust real estate, or at least have a different reaction to losses in real estate than they do in stocks? And I would love to share with you a thought on that, and then you can tell me your thoughts.
Sure, go ahead.
I think it's conditioning. I think people have been conditioned into the concept that stocks are places where you gain money and lose money. And when you lose money, you can't fix it. You wait. You wait. Now, those of us who invested in stocks long enough know, well, yeah, but sometimes you actually do lose the money. It doesn't come back. The company closes, right? Something happens. I've lost $1 million in stocks in the dot-com bust, almost $1 million. And I've lost $1 million in real estate. So having lost $1 million here and $1 million here, right? And I know you've lost your numbers as well. I've learned it's an investment. The nature of the fact is that you're choosing to invest. And when you're choosing to invest, there's risk associated with it. And cycles happen in every investment, even gold. Cycles happen even in gold. But what you're conditioned to, what you anticipate is going to happen, is what our reactions are based out of. Because it's clearly not based out of how much money my clients are losing. Because when I have this conversation here and they've lost 100,000 here, and I have this conversation here and they've lost 100,000 here, they're much more upset about 100,000 loss in real estate than they are in $100,000 loss in stocks.
Yeah, so I think I'm glad I'm listening to you say what I would have the same thoughts and questions. I think what it is in real estate, just like my 25 private equity deals that I funded, and then I went out and raised $100 million of equity, is they know us. We're selling them, like it's us personally selling them to make the investment, to trust me, that I'm not going to lose your money, and we'll do everything we can to preserve your wealth. And then you get that day where in my private equity deals, that only 2 out of 25 make it, right? That's on a startup company. So I mean, we have losses after losses in that world. Even though people understand that and they know it's a crapshoot, they still look at the person that raised the money as the guy that took the money. When you put it in the stock market, you don't know the guy, right? Mm-hmm. It's sort of the broker is the intermediary. He's not the principal, and he can say the market's not cooperating with us today. We can't say that the property's not cooperating with me today because we're managing the property, right?
Right.
So it's personal. That, I think, when you just expressed your thought, it dawned on me, that's the difference. We're in deep with the trust and the emotion of the investor's heart. And And thinking about that, we own that responsibility, and that keeps us up at night, right?
Yeah.
It really does. So, but heck, it's pretty sweet when they win, though. We've even had people that have had enormous gains. They didn't think they had enough. And it's like, that's greed, right? And so once we understand that it's greed, it teaches people how to suck it up and take the money and be happy.
Glenn, thank you so very, very much for your time. Thank you very, very much for your honesty and your transparency. Thank you for your depth of experience.
You're welcome.
That we can share with people so that we can get a sense for. You've answered all my questions because you knew they were coming, so I couldn't answer. The one question I was going to ask you was the deal that went wrong, and you're like, well, I was going to talk about how I lost money in stocks, and that's what drove me over to being a real estate investor, which is a commodity that doesn't disappear. So you already told me that. Is there more you want to tell me? Do you want to tell me more about that story, or you got another one for me?
Well, I've got lots of stories, but this is a real estate interview, so we got to stay on the rails, right?
Okay, so let's stay on real estate. Yeah, because I'm a great believer that I talked to you before about, we can tell them what to do all day long, but how we get out of a situation is an opportunity role model that the how we do what we're doing is just as important as the what we're doing. So how do we grow up? How do we solve a problem in real estate? How does it grow us? And how do we take care of our investors, or how do we move forward as professionals in the field after a loss?
After a loss, how do we do all that? You take your write-off, which is a gift from the government, right?
Yes.
And you take what's left and you reload, and you don't stop. And if there are losses, right? It happens. So you take a loss every once in a while, but if number one, don't put all your money in one deal. Right. If you've got $1 million to invest, put $250,000 in 4 deals, and you might lose 50,000 or 100,000, but the others would have made 200 or 400,000. And so your net result is a gain. So that's a simple strategy, but the one that's losing hurts. We all know that. It's a spirit of the heart. Failure. It's failure. That's what it is. Yeah.
It is. It is. And we take it as failure. We do. I mean,
yeah, it's personal. Yeah, then I have to come home and talk to my wife about all the money I lost, right? That's even harder. So
I got married in 2006. So by 2009, you can have an idea of what our household conversations were like.
Oh yeah. Yeah, that's brutal.
That's brutal.
So
what you do is you take the losses, use them for your taxes, and you double down and move forward.
Yeah, and out of each loss you get, after you get over the emotion, you have a gain at the end of the day. Had I not had those losses when I sold my business, I wouldn't be doing what I'm doing today, and I'd be bored. I mean, after I sold the business, I bought a Bell Jet Ranger helicopter, and I flew it all over the country, and it was my Winnebago in the sky. And I got bored. I mean, my friends were working. I had money in the bank. I could pay my bills, and I had to do something, right? Mm-hmm. So I started flying for philanthropic causes and giving the money that I raised with the helicopters to the cause. And that introduced me to high net worth people. Had I not lost all the money in my business, I wouldn't have been motivated to get to know high net worth people, right? And then those high net worth people are the ones that gave me the access and the ideas to do what I'm doing. So take the loss, turn it into what did we learn from it, and let's go forward. And that's magical once we get there. But there's years of suffering. I have to say, it's painful to take a big loss.
It is years of suffering, I think, before you finally get down to, well, what's the one value I can count on? And it's Jay Massey calls it fail forward faster. Yeah,
I like that. Yeah, just do it. Yeah.
Or Nike says, just do it. Right. Or, Covey will have you double down on your priorities. for me, I talk about just getting a stronger sense of, so it's funny, you get stronger and more humble,
Yes, exactly.
you know?
You bring up the point though that I noticed people who are not risk takers, and most people aren't, right? And
Mhm.
I mean, we get scared taking risks, but we're willing to do it.
Yeah.
But they can't comprehend stepping into the risk category, and um, they are fortunate when they meet people like us because we help them see that they can do better with their investment than what they've been getting. And it's a process too that takes time. It can take a year to cultivate an investor.
Yeah. Yeah. And it should take a year to cultivate an investor. There's a learning curve that they need to walk through. Not just for some of my investors, it's not just about me. It's about investing in real estate. It's about investing in this class and
Yeah,
in this asset class. It's an educational process of bringing them up to speed. And I know many syndicators who are like, yeah, no, I need to educate my investors. It's not just transparency, it's educating the investor so the investor is aware of what's coming down the pike.
yeah,
They're aware of what's happening so that they're calm. Because otherwise, I end up dealing with, if I just take their money and I don't educate them along the way, I end up dealing with more flack, more concern, more worries, more phone calls, more customer service, more care. Whereas if I just educate them deeply up front,
yeah, yeah. Of course, when somebody's in trouble, they want to know more. They're more interested in learning when they think it's not working out.
it's
So
true.
it's
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 true.
it's easier to educate when people are ready to listen, right?
Yeah. Yeah,
So
it is. It is. And you're right. They don't listen as thoroughly as maybe one would want them to
yeah.
at first. It's
And by the way, I'm in that class too. I have the same. I'm just like everybody else. I get scared and want to know what the heck's going on. If something's not right,
yeah.
and then I'll pay attention.
They don't pay attention. I
If
know.
everything's working, I'm sort of like off onto my next investment.
It's true. I'm the same way. I am absolutely the same way. I try very hard to make sure I actually do my 8 to 10 hours of due diligence before I invest in something because it's too easy for me to go,
Yeah,
yeah, I know, I know Kirk. Sure, I can give him 100,000, not a problem. But it's like, Christina, you know Kirk, but did you actually look at the deal?
yeah,
Actually
yeah,
look at this. It's in Oklahoma or it's in Arkansas or it's like, did you look at the demographics? Like, did you keep your own discipline in place? Right?
yeah. So I get the fact that investors want to look at the deals, and at the end of the day, the person that's running the deal, like in my case, Colonial's Capital, we know so much more than they can know because we've been cultivating that transaction for a year, right? And then when we start the due diligence, we've got 6 months of due diligence before the investor sees it. So
Yeah.
we've seen so much, and there is a level of trust that they have to have in us that we did our due diligence.
There is. Okay, Glenn,
Yeah.
we've
Good
hit
to
our
see
time. Wonderful to have you here. Thank you. So
you.
I love the conversation that we got to have, just that 20 minutes before and this conversation now. I think people need to know your story. I think people need to understand the depth of person it takes along with the depth of the due diligence in the investing. Because like you said, they're trusting us. And
Yeah.
so our person, it's our depth as a human being and our character and our integrity that can be truly as defining, if not more defining in some cases, than the deal itself.
Correct. And that's where I celebrate my team because they're buying the team, right?
They're buying the team.
Yeah.
Wonderful. Thank you so much for listening. This is Christina Suter on Real Estate Breakthrough. I had Glenn Hanson with me on Colony Hills. You can absolutely find him very easily on it is literally colonyhillscapital.com. Thank you so much. This is Christina Suter on Real Estate Breakthrough.
All right. See you guys. Take care.